Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 30th, 2025, and we're diving into the latest earnings report from NLY Capital Management. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. NLY Capital Management has just released their fourth quarter 2024 results, and there's a lot to unpack, from their earnings performance to strategic portfolio adjustments.
Revenue and profitability overview. Let's start with the financial highlights. NLY reported a GAAP net income of 78 cents per share for the quarter. How does this compare to their earnings available for distribution?
Great question. While the GAAP net income stands at 78 cents per share, the earnings available for distribution, which is a non-GAAP measure, is slightly lower at 72 cents per share. This metric is crucial as it reflects the company's ability to generate income for distribution to shareholders, excluding certain non-cash items.
And what about their economic return and book value?
NLY achieved an economic return of 1.3% for the fourth quarter, contributing to an impressive 11.9% for the full year 2024. Their book value per common share is $19.50, which is a slight decrease from the previous quarter.
Portfolio and strategic adjustments. John, can you elaborate on NLY's portfolio and any strategic adjustments they made this quarter?
Absolutely. NLY's total portfolio is valued at $80.9 billion, with a significant portion, $70.6 billion, in their highly liquid agency portfolio. They have been strategically rotating up in coupon by adding high-quality specified pools and TBAs while selling intermediate coupons.
What about their residential credit and MSR portfolios?
The residential credit portfolio saw an 8% increase quarter over quarter, reaching $7 billion. Meanwhile, their mortgage servicing rights MSR portfolio grew by 17% to $3.3 billion. These increases reflect NLY's focus on diversifying and strengthening their investment strategies.
Interest margins and financing costs. Interest margins and financing costs are always critical for NLY. How did they perform in this area?
NLY's net interest margin increased to 0.75%, and when excluding the premium amortization adjustment PAA, it rose to 1.71%. This indicates a strong performance in managing their interest income relative to expenses.
And what about their financing costs?
The average GAAP cost of interest-bearing liabilities decreased to 4.96%, while the economic cost was 3.79%. This reduction in costs is a positive sign, showing effective management of their financing strategies amidst a volatile interest rate environment.
CEO insights and future outlook. Let's discuss the insights from NLY's leadership. What did CEO David Finkelstein have to say about their performance and future outlook?
CEO David Finkelstein highlighted the strong economic return of 11.9% for 2024, driven by robust performance across their investment strategies. He expressed optimism for 2025, citing favorable dynamics in their agency MBS, residential credit, and MSR portfolios.
What are the key factors contributing to this optimistic outlook?
Finkelstein pointed to attractive returns in agency MBS, decreasing financing costs, and a steeper yield curve as sector tailwinds. Additionally, NLY's deep capital base and strategic relationships position them well for further growth in their residential credit and MSR portfolios.
EPS forecast and analyst expectations. John, let's talk about the EPS forecast. Analysts were expecting 67 cents per share. How did NLY perform against these expectations?
NLY exceeded expectations with an actual earnings available for distribution of 72 cents per share, beating the forecasted 67 cents. This outperformance is a testament to their effective portfolio management and strategic initiatives.
How many analysts were involved in this forecast?
The forecast was based on estimates from 3 analysts. Beating the consensus is a positive indicator of NLY's operational strength and market positioning.
Key takeaways. As we wrap up, NLY Capital Management has delivered a strong performance in Q4 2024, with an economic return of 11.9% for the year and an adjusted EPS of 72 cents, beating the forecast. Their strategic growth and optimistic outlook for 2025 make them a company to watch.
Indeed, Annaly's effective management of their portfolios and cost structures, along with their strategic initiatives, position them well for future growth. Investors should keep an eye on their developments in the coming year.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Annaly's performance in the comments below.